Good evening, trading world. Coming to you with another nightly update or another updated night. Trying to get ahead of things before pre-market because we are going to experience a lot of volatility, I think, pre-market. And a lot of that is going to be based on how we do through the night, whether we can hold the levels we're at through the night. I have some levels marked here on the board, and looking at the SPY this evening as a proxy for the S&P 500. But as you can see here, these two white lines, this 558 area and 551, this marks crucial or critical area for reversal or change of direction going into tomorrow. And as you can see, we're already in that area. So if we can hold this area, it's going to determine a lot coming into the morning with the big reports that we have, the CPI, the PPI, and the unemployment claims. All are going to do a number on the market in the morning. And this presents opportunity for big moves, like I said again, pre-market. To me, the unemployment report will send us to an extreme based on where we are before 8:30 a.m. Like I said, if we can hold this area in here, it bodes us kind of starting the day off with a fade going to the downside. However, again, based on where we are, if we start off the day where overnight we make it down into the reversal zone and 8:30 is here, we're liable to see something like this, where we maybe take a dip and then get that rubber band snap back toward the upside. And it's going to be nice to see how long that will actually last based on where we are in the morning. But those are the things that I wanted to kind of touch bases on because of those reports happening so early in the morning. Also, at this stage, it's kind of hard to see anything in the charts technically that will give you a big hint on movement tomorrow. However, there was something in the option chain that was yelling at me that the end of the week was going to be super volatile. But before I go there, I want to make sure you understand the levels that I have up on the board, and I will place the actual support, the king, queen, and the jack, queen, king support and resistance levels in the description. But this line right here is very important. This purple line right here, this is the upper edge of the market maker's expected move. And as you can see, we closed above that line. And because we closed above that line, it tells me we have a higher probability of coming back down inside that line at some point or for some period of time over the next 2 days. So anything up here gives us a rubber band snap back toward this area. So I wanted to make that clear in regards of going into the market tomorrow. I saw a neat little diagram I'm going to bring up. I'm going to talk about the diving board bounce getting bigger and bigger. All right, I saw this neat little image with a stick figure on a diving board and how, or the phases of, in the springboard dive. And I hope I'm giving credit by showing this Walker 2010. That's where the illustration was from. Sherry Walker. But if you could imagine that price action is the actual diver and our support level is the actual diving board, and we've been running down earlier in the week and we kind of jumped down on support, and support gave way a little bit and we bounced up off of support, and we came back down and touched back down on support again, and this time it gave way a little more and propelled us up a little higher. And there's a chance for us to do this, a few times where we kind of build up that energy. But what's going to end up happening is that we're going to get enough momentum to really pierce or make a run at resistance up here. And we're going to be a long way from support. But we're going to turn around and dive, and when we're coming back down in that dive, we're going to have enough momentum to actually break through support or dive off. So that's what I was thinking of when I was talking about this springboard mentality that the market is in right now. The last thing I wanted to kind of talk about was there was something in the option chain that was yelling at me that the end of the week was going to be super volatile. If we go back and think back and look at the option chain, you can see implied volatility was super high all week. If we're looking at this is actually what implied volatility is right here, and just need to go to the 13th round here. This is implied volatility, and this on this end is the actual expected move. What I saw coming into the week, we had a pretty much a really high implied volatility coming into the week. So you can see Monday was 2052, Tuesday was 2010, Wednesday 2083, and as you can see when we got to Wednesday, that's when that CPI report first hit. We had a bigger expected move than earlier in the week, and then it just kept getting bigger. So that's what I was looking at, and that's what was screaming at me all week, that we're going to have that diving board bounce type move and get bigger and bigger as the week goes on. And the same is what I just showed in the little image with the stick figure diver as bouncing off of support. But eventually support will break. So I just wanted to touch bases on that and kind of point that out. I've gotten a lot of questions about those two things, especially expected move. Where is it? How to find it? This is where it is. You look at your option chain. The numbers over here basically stand for we have a chance of moving plus or minus that amount.